Germany's Frankfurt, AP, in spite of a slowing European economy and a slowdown in rate hikes by the US Federal Reserve, the European Central Bank continued to raise interest rates at an excessive rate on Thursday and promised additional increases in the future. The Frankfurt-based bank increased its significant benchmarks by 0.5 percentage points and declared it will follow suit in March. In the 20 nations that use the euro, families are still being harmed by price hikes that have moderated from record highs but are still being fiercely stifled by policymakers. At this point, you'll likely respond, yes, but what about after March? Does that imply that you have arrived at the highest point or peak? Later, she added. No, not at all. We are aware that there is still plenty to do. Knowing that we are not finished, the Fed stepped back a day earlier, slowing to a quarter-point raise as central banks around the world re-evaluated their strategies for dealing with price surges that have started to ebb. The Bank of England also increased rates significantly on Thursday with a half-point increase. The economy of the Eurozone has been in decline, expanding by just 0.1% in the final quarter of 2022. However, Lagarde was generally upbeat, noting that supply chain bottlenecks were decreasing and that even after Russia cut off the majority of flows to the continent, Europe's supply of natural gas was becoming more secure. She stated that the economy has proven to be more resilient than anticipated and would likely improve in the ensuing quarters. The ECB's larger movements in comparison to the Fed partly result from starting rate increases in July, 4 months after the Fed did, and from lower levels. More ground must be made up as a result. The annual rate has decreased 3 months in a row after hitting a record high of 10.6% in October, while it is still high. One of the main issues preventing economic growth is inflation, which deprives people of purchasing power as increased food and energy costs eat up their earnings. Utility expenditures for homes and businesses have increased due to the war in Ukraine's high energy costs, which have been passed on to consumers at stores and restaurants. That has been the main cause of European inflation, which is significantly higher than the ECB's target of 2%, which is seen to be ideal for the economy. As a result of finding new suppliers and warmer than expected winter weather, natural gas prices have declined from all-time highs during the summer. European governments have voted billions in relief measures to protect citizens from these high prices. However, they are still 3 times higher than they were when Russia positioned a large army on Ukraine's border. As energy costs have fallen, Lagarde stated, it is vital to now start pulling back these policies promptly and in a coordinated manner. While increases in interest rates are typically used to combat inflation, they also mean that customers must deal with significantly higher mortgage rates when purchasing a property and banks that are becoming more stringent with lending. The rate on overnight deposits held by commercial banks is 2.5%, whereas the ECB's benchmark lending rate is currently set at 3%. Following the meeting on Wednesday, the important U.S. federal funds rate is 4.5% to 4.75%. Thank you for listening and don't forget to subscribe.